of Market Makers. My guest on the show today is Mr. Shiv Puri, Managing Director of TVF Capital. Shiv, fantastic to have you on ET Now. It's your first time, so a very warm welcome.
Thank you.
Let's talk about the India story. Hands down, India is in a sweet spot. But my question to you is that, are markets pricing in all the good news? Are valuations still on your side? Welcome.
Thank you.
Let's talk about the India story. Hands down, India is in a sweet spot. But my question to you is that, are markets pricing in all the good news? Are valuations still on your side?
I don't think markets are pricing in the good news over any sort of medium-term perspective. Even if you look at valuations today at 15, 16 sort of times earnings, you see that those are pretty reasonable in terms of where valuations have been over the long term. I think that if you look at foreign flows also this year, they've been half the levels that they were last year. It's not like everyone has, put India right on top of their map. And I think most importantly, if you look at companies on a bottoms-up basis, you're still seeing, pretty good opportunities to invest capital. So I don't think that, this story is over. In the short term, there can always be, a correction like that happens invariably in any market. But I would also step back and sort of look at it on a multi-year perspective. And the way I look at it is that if we get our growth back, and now we've gone from a low of 4.5% real GDP growth to 5.7%. But if we get growth back to the 6-7%, say sometime next year or the year even after that, and nominal GDP growth is 11-12%, you will see companies that will grow revenues by 15 to 17%. And I think the big picture that's being missed on corporate earnings for 2015 and 16 is the extent of the operating leverage that exists in almost any company. Today, I think operating margins are significantly lower than where they are supposed to be. And for a whole host of reasons. We've had high inflation and high interest costs and things like that. But all of those things will get better. I believe that earnings with operating leverage can grow in the 20 to 25% range.
Okay, so I'm not going to challenge your thesis, but let's take the clock back and look at the market behavior. Nifty in this year itself has appreciated by about 30% plus. Good quality stocks, banks, IT companies, pharma names, they've appreciated between 50 to 70%. So my question to you is that, whereas the highway is looking clear, are stock prices running slightly ahead of themselves? Is the margin of safety still on your side?
I think that depends on sort of where they were also coming from. I mean, if you rewind the clock back last year to this time, things were looking much more darker than they are. Business sentiment was very low, consumer sentiment was low, politics were a little bit in a different position. So while there were some positives, I think the stock market was quite low. And I think so valuations have moved up from well below average to slightly above average. But I don't think, if you look across the board, that there is any sort of irrational exuberance, if you will. Like I said, they may have gotten a little ahead of themselves because some of the earnings have yet to come through in many of the companies. But I don't think that there is a concern on any significant overvaluation at this point.
The Q2 numbers were not that impressive, and markets are still giving their favorite stocks the benefit of doubt. What happened if we don't see revival in next 2 or 3 quarters? Will markets run out of patience, or are you confident that the revival will happen?
I think the important thing is that not all sectors and the rising tide is not going to lift all boats. So I think one has to be very careful on which sectors and companies that one is looking at. I think over the next 2 or 3 quarters, you are going to see business improve. You're going to see revenue growth improve. You're going to see some sort of operating leverage come in. If you look across, I think there will be opportunities for companies to do better.
How much of the current market action is also a function of global market action? As we speak, Japan is at a record high, Dow is at a record high. Barring some European markets, most of the other major European markets are also at a record high. So in isolation, we may feel special about the India story, but ultimately we are part of the global club.
We are definitely part of the global club, and if there is a shakeout globally, that does impact India. But I think if one steps back and looks at what's happening this time around in the world, India is part of one of the emerging countries or one of the developing countries. And if you look at what's happening in some of these developing countries, it's not all good news everywhere. We know in China has its set of issues. There are some. It's very difficult to understand a Chinese company's bank's balance sheet, for example. It's
shadow banking and all kind of other key concerns.
Exactly. If you look at Russia, they have a geopolitical issue, and Brazil has, I think, potentially a leadership issue in terms of the economic direction that they seem to be going in. So there are concerns around a lot of different parts of the world. Europe also seems to be in a tight spot. Japan, the stock market might be a high, but you have to look at some of the other things that are happening in the economy that make it very difficult from an investing standpoint. And I think if you look around the world, the U.S. economy and markets seem to be doing well. And I think India will start doing well. And if you look around the world to try and find economies which have deep markets, quality companies, are of some size, you can't find too many countries in the world as you look at it today.
What could be the downside in this kind of a market? Assuming that we're in a bull market, and in a bull market, a bull market corrects very rarely.
It's hard to predict an exact percentage of what the decline could be. I mean, there can always be sort of 5-10% corrections that come along the way. I think the 2002-03 onwards template is a pretty good time to look at sort of how things could potentially play out. In 2004, we did have a political change and a business cycle turn at the same time, which is exactly what 2014 is undergoing. So you can look and see there will be some sort of corrections along the way. But I don't think there is something significant that's in the horizon.
Shiv, the India rhetoric is strong. The India story is appealing. But if I look at flows have not been all that promising. In fact, the net flows, what we got for 2013 when India was in a mess, were actually much higher than what we've got in 2014 when India is in a sweet spot.
Yeah, I think one of the interesting things is that, global investors are paying attention to the fact that they can't paint all emerging markets with the same brush. Now they're differentiating between the different markets. So whereas in the past, if allocations may have been top-down in terms of having an EM exposure or anything like that, now it's sort of looking at a country-by-country basis to see whether this is what they want. And that takes a little time, more time. Okay. So they're doing more work to see whether some of these things are real and whether they want to be a part of it. I think the second thing is that we are going to be fairly differentiated in the years to come. But if you wait for all the evidence over the next 2 or 3 years, I don't think the markets are going to be at these levels. So I think that's the sort of challenge that global investors are looking at. They're getting up to speed on some of the nuances that have happened and changed in the Indian market. And there have been some disappointments in the past in India, so they have to overcome that. Yeah,
that's an interesting point. So you are of the view that in next couple of years, we will actually get India-dedicated money, not just dumb money, not just macro money, which was coming via the ETF route.
I absolutely believe that. In fact, I think that a lot of global allocations that may be based on a MSCI weightage, for example, where India's weight is incredibly low given its size, GDP, market capitalization, I think maybe some of those things might change, where people will look at it and say, kind of how you look at selecting a stock. Well, let's not select it based on some formula. Let's select it on the fundamentals of this particular country. And if something like that were to happen, you could see, a significant change in how global investors allocate capital to India in the years to come.
Where are you shopping in this market?
I think we look at buying companies where we think it fits a particular framework, and right on top for us is quality. So we like to invest in high-quality businesses. Now, quality usually means businesses that have some sort of pricing power. Yep. Because if you're in a very competitive market and you don't have pricing power, that really doesn't make you a very quality business. The second thing we look at is growth. In India, you want to be in sectors that are growing fast. And I think the third element that we look at is how long will the growth last? Okay. And that, I think, is one area where it is possible to build a significant edge in terms of your analysis versus what the market is saying.
So some of your top holdings, which I know of from some of my friends, is a name like Pidilite, something like a Bosch. Now, they're good quality companies, but they're expensive stocks. Are you still happy to own the expensive end of the market?
See, I think they may look expensive on a PE basis today, but if you look at what the consensus estimates are for some of these companies, they're not building in any margin improvement. I've yet to see a business cycle turn without margin improvement.
Okay.
I think the growth rates are on the lower side of what happens when a business cycle turns. So you're going to see, I think, earnings to be significantly ahead of where some of these companies are pricing of those numbers. And that comes to my point of longevity. You know, if these companies are going to compound at 25% earnings growth over the next several years, well, then if they are trading at in the high teens sort of multiples, that's not too unreasonable a valuation.
So you're happy to own a Pidilite or a Bosch for the next 4 or 5 years?
Yeah, I think these are businesses where you can't even put a time frame like that on it.
But as of today, you see visibility for next 3 to 5 years for them?
I think so. I mean, if you look at some of these companies, there are a lot of things that are happening structurally. There are a lot of things that are happening at the company level where the growth opportunity is significant, and they're well-run businesses. They generate a lot of cash flow. They're high return on equity, and they're just super quality companies.
So what was the last big acquisition in India?
Well, I'd say we look at not last big acquisition, but the areas that we're looking at still would be in the private sector financial services companies.
Aren't they expensive? A name like HDFC Bank or a Kotak Mahindra Bank 5 times book, HDFC Bank 4 times book. These are lofty valuations. So again, I come back to the valuation.
Yeah, I think you have to look at it and say, well, for example, like an HDFC Bank or a Kotak Bank, the valuations, if you look at it where they are in a context historically, they're in the average to slightly higher band. If you look at it on earnings multiples, they're in sort of in the mid-teens to high-teens sort of range. But these are franchise businesses. And, if you look at a HDFC Bank with a $30 billion market cap company, this is one of the largest private sector banks in India. It's a $1.8 trillion economy. The market cap is $30-ish billion. It's small, it's tiny. And if you look at the track record of this company, I think these kind of businesses are going to be much bigger in the years to come. And I find that in some of these high quality businesses, the stocks may not go up for 3 or 6 months or something. But eventually, when you look back, they've done much better than the lower quality businesses that are there.
Right. Shiv, the way your fund invests is that you don't chase some of the big stocks which are really dominated by institutional investors, the Capitals and the Abedeens of the world. Now, private banks are largely dominated by some large players. So where are you picking your spots in the private banking space?
So, I think in private banking, there are a lot, or in banking and financial services as a category, there is a lot of opportunities in some of the home mortgage finance companies.
Okay.
There are a lot of
Can you throw in a name?
Well, so if you look at companies like, a Repco or a Groww, but if you look, Groww is a little expensive, but if you look at companies like Repco, I think there is a humongous opportunity. And when you look at these housing finance companies, the key to really see is, whether they have the right strategy in place, because growth is there, but you have to make sure you lend smartly. Whether they have the right management team in place, and whether they have the right, fundamentals in place. But in some of these companies, they're $500 million, $1 billion market cap companies. The loan books are, $700, $800 million. They've lent to 70,000 units. So it's about $10,000 a unit. But if our Prime Minister is talking about housing for all in 2022, that means there's a shortage of 45 million housing units. So whether it's housing for all, housing for half, or housing for whatever,
housing demand is here to stay.
Housing demand is here to stay.
And interest rates coming down, that's an added bonus.
That's an added bonus.
Okay. So financial is one space which you're bullish on, but I'm sure there are other pockets and other areas where you're focusing on. The India story in last 2 years has been largely represented by IT and pharma. What's your take on large cap IT?
I'd say on IT services in general.
Is one space which you're bullish on, but I'm sure there are other pockets and other areas where you're focusing on. The India story in last 2 years has been largely represented by IT and pharma. What's your take on large cap IT?
I'd say on IT services in general, the opportunity that is coming out because of digital, because of social mobility, analytics and cloud, I think is going to be much bigger than what people think. And the reason for that is that IT services so far has largely been a domain of the CIO, the Chief Technology Officer, and from a cost standpoint, we want to lower costs. Today
They've been
it's coming-
outsourcing and they've been growing.
They've been outsourcing and growing. Today, it's a revenue opportunity. So the chief marketing officer is getting involved because he has to set the digital strategy. He has to set his mobility strategy.
That's a great point.
Now, when it comes to a revenue side of it, then your ability to pay more goes up. Your ability to be more sticky with the customer goes up. So if a operating officer, chief operating officer, or a CTO is saying, well, you're selling me something for 10, but he's giving it to me for 9, so how are we going to negotiate? When it comes to the revenue side, those discussions don't take place.
It's about innovation. It's about
It's
productivity.
About innovation. It's about productivity. Exactly. And I still think the cost arbitrage.
But with the exception of TCS, I don't get a sense from other IT companies that they are up there when it comes to the digital opportunity. I don't know if you agree with my view.
I think I actually don't. I think that there's a lot of innovation happening in a lot of different companies.
Give me an example.
I think, for example, even a company like Tech Mahindra, who has a very strong telecom background, is making a lot of progress on the mobility front. And, they will go in and potentially talk to their telecom customer who is engaging with the enterprise customer, because the enterprise customer wants to have mobility. And Tech Mahindra will probably go with them.
Stock is up, what, 100% in last 1 year?
It's done well. It's done well. But I'm saying the opportunity so even a company like that is doing it. They're not a small company anymore. They're sort of
Part of the Nifty now, actually.
Yeah, and they're in the top 5 for big IT companies now in India. But I think there's a lot of work happening. There won't be all winners. There will be. You have to be very selective. But I think if you look at it globally, the advantages that India had in what I say is phase 1 of IT services are all there for phase 2 of IT services. And I think phase 2 being a revenue center can be even a bigger opportunity.
So the best way to invest in IT is stick to large 4 or 5 names. Don't go down the ladder.
Yeah, I think that, I think scale matters in this business.
Okay.
And it's a very important advantage to have. So as long as you find that the innovation is taking place within the company, I think scale is an important element in this business.
The first port of call for any institutional investors. Q1, Q2 numbers from an engineering company like L&T or a BHEL, they've not been encouraging. Are you betting on cyclicals? Do you own cyclicals?
Well, I think in the cyclical space, so an L&T would not be something that we would.
Why is that? I mean, it is India's biggest company.
It is, and that's the reason why it's very large. It's very sort of foreign investor favorite. There are a lot of interesting companies that are of smaller size that would be more interesting. But I think for them the lag is going to be still a little while away. They are about 6 to 9 months from seeing the leverage come into their bottom line. But some of the smaller companies that are more niche, that do something really well, are much more interesting.
It'll be easier if you give me a name.
Well, I think just companies like a Cummins India, which is in the capital goods.
They came out with good numbers actually.
They've done well on the export side. The domestic business is still turning slowly, but they're going to see their business domestically pick up with a lag.
Are you bullish on the diesel business? Diesel, genset business?
Yeah, I think there is this misnomer that India is going to be power sufficient very shortly, and we're not going to need that. But I don't think that's the case. I think you need backup power in most facilities, and that's going to remain for a long time. And if you look at, for example, you talk about IT services. IT services have to have backup 24/7 power, regardless of what the electricity infrastructure is. Hospitals, many of the good hospitals do that regardless. So, I mean, with the growth that's going to happen in manufacturing, in hospitals, in IT services, etc., you're going to have backup diesel power sets that are going to remain.
The cult space, not locally but globally, is the entire e-commerce space or the cloud space and the big data, vertical. How are you betting on that? Because here's $1 trillion opportunity which is staring on our face. Unfortunately, not too many companies are there, but is it worth really buying into that space?
So we're not doing anything in the e-commerce space, and frankly don't understand it very well either. I was in Silicon Valley in 99 through 2001, and I was at a venture capital firm there, and we saw something very similar happening. Now, of course, this is different. There's a lot of things that are potentially happening that are much more positive now than were there. But it's absolutely amazing the amount of capital that some of these companies can raise, that the valuations that they can raise it at. But we have no expertise in that area at all.
The famous words from Sir John Templeton are that the four most dangerous word in the markets are that this time it's different.
Exactly.
There's nothing different actually. Bubbles always happen and bubbles always get pricked.
Yeah.
Let's talk about the interest rate beneficiaries, because interest rates in India eventually will come down. Will that happen in this quarter, next quarter? That's anyone's guess. Would you be buying into autos?
I think that the auto market, the four-wheeler auto market, is a very competitive market. Maruti has a 40% share, but then after that, it gets very competitive. It's a very difficult market. I would look at maybe some of the two-wheeler companies that are still interesting, and I think there's been a lot of concern on, for example, a Hero Motors after it split with Honda, but they seem to be doing pretty well. The financial services sector as a whole will continue to benefit from interest rates declining. But my sense is, at least from what I'm observing from the Reserve Bank in terms of the releases that they're making, is that we're probably 3 to 6 months away from interest rates coming down.
So auto sales have revived even though rates have not come down. I wonder what will happen when real rates in the system will come down.
Yeah, I think demand will improve. But for example, there would be maybe even a better opportunity than auto would be, let's say, for example, in the battery market. There are two companies there that are doing very well. One,
the auto replacement market.
In the battery replacement market, that are doing well, because auto is just a very competitive industry, and so it's a little hard to sort of see who's going to really do well. And I think that's the one important thing in investing, just in general, is you want to look at markets that are big, but you want to look at markets that are not very competitive, because the companies that do well there tend to dominate and deliver outsized returns. So even if you have to pay up a little bit for them, it's a much better bet than businesses that are very competitive.
So you're of the view that a structural and a multi-year bull market has started in India?
Yes, I believe that we are at the start of
this is the start.
I believe
even though we are up 30% this year.
This is absolutely the start. Look, since 2007, the markets are also up only 30%.
Yeah.
So there has been an 7-year time correction on the markets.
And earnings have gone up.
And earnings have gone up significantly. So I would look at more at valuations. In 2007, the markets were trading at 22, 23 times forward earnings, and people had projected earnings to grow at 30%.
Yeah.
Today, the markets are trading at 15, 16 times earnings, and people are projecting 15, 16% earnings growth. So the likelihood that earnings can do that or better is higher, and the multiples are significantly lower. So I don't think we're anywhere near any sort of concern right now. And some of the things that are falling in place, albeit slowly, remind me, at least, of someone who loves studying history, of sort of what happened in America in the early 80s or the late 70s. They came through a lot of different problems, and the
stars were aligned.
And the stars were aligned, both on the economy and the politics. Yeah. And they had a very good sort of economic growth, stock market performance over a fairly long period of time. It's too early to say that probably today, but certainly those things are possible.
Okay, so final question. You mentioned that you are a student of financial history. You've seen many bull market and bear market cycles. Which has been your classic favorite? Which is one stock which you've been owning from last 5-7 years and you're happy to own for next 10 years?
I think the company that we've falls in that category would be Michael Bosch.
Okay.
Is something that, it's a fantastic business. It's a global monopoly. They're not listed anywhere in the world.
I didn't know this. Even not in Germany?
Not in Germany. It's a private company in Germany. Okay. So they are listed in India, and for a whole host of other legacy reasons.
Yes.
They wouldn't like to be, I'm pretty sure. But since they are, you get an opportunity to participate in this kind of a business. I think in 2017, when the Bharat emission norms change, they're going to have a big opportunity ahead of them. And as like you were saying earlier, what happens if auto demand does well? Well, I think Bosch will do well, and they're a much higher quality business than some of the auto companies.
And what a stock it's been. Really appreciate your time, Shiv. Glad you could join us.
Thank you, Nikunj. Thank you for having me here.
That's it on this edition of Market Makers. I'm Nikunj Dalmia signing off. Thank you for watching the show.